Today, Bitcoin falls to end the week. Morgan Stanley drops restrictions on which wealth clients can own crypto funds. And Ashley Ebersole, former senior counsel at the Securities Exchange Commission, shares his take on the changes made at the SEC and CFTC to regulate crypto. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies in the red to end the week as a U.S. government shutdown dragged into its 10th day. Now, as of noon Eastern, Bitcoin dropped nearly 2% to $119,000. Ether fell nearly 5% to $4,100, and XRP fell more than 2%. Now, these moves lower come the day after the Senate once again failed to pass dueling stopgap funding proposals that would have put an end to the shutdown. With the stalemate continuing comes a lack of economic data from the government, and so investors are struggling to find catalysts. However, the latest data from the University of Michigan shed some positive light, showing that both the U.S. economy and consumers are holding up. For the week, major cryptocurrencies are in the red, with Bitcoin falling 3%, Ether dropping more than 9%, and XRP sinking 10%. Okay, let's talk about the top stories. Morgan Stanley is expanding crypto access to its clients. CNBC learned that the investment bank told its financial advisors that it would offer crypto to all its clients in any type of account, including retirement accounts. Now, this option was previously only available in taxable accounts for clients with more than $1.5 million and an aggressive risk tolerance. Morgan Stanley advisors will begin pitching crypto funds to all clients as early as next Wednesday. This comes after we told you last month the investment bank is close to offering Bitcoin, Ether, and Solana through its e-trade division. Meanwhile, in the UK, one of the region's top investment platforms is cautioning clients against crypto. Hargreaves Lansdown issued a statement saying it believes Bitcoin is not an asset class and added that the platform doesn't believe crypto has characteristics that mean it should be included in portfolios for growth or income. The statement is in response to a ban on crypto exchange-traded notes being lifted in the UK on Wednesday. These are debt instruments tied to one or more assets. Lastly, a new poll suggests that issues tied to crypto could have an impact on the 2026 midterm elections. According to the National Survey of Crypto Investors released this week and conducted by the consultancy firm McLaughlin and Associates in July, 64% of a group of 800 respondents said that the candidates' positions on digital assets were important when considering whether to vote for them. Also, the survey found that crypto investors approve of the job that President Trump is doing and are more likely to trust him and Republicans than Democrats to advance crypto in the U.S. Also, according to the poll, crypto investors overwhelmingly support President Trump rolling back former President Biden's regulations and enforcement on crypto. Okay, jumping to regulation for our main story. Both the CFTC and the SEC have overhauled their approach to the crypto industry under the Trump administration. Now, that includes dropping lawsuits, revising guidance, and then just this week, SEC Chair Paul Atkins said the agency could have an innovation exemption for crypto by the end of the year. Crypto World's Jordan Smith spoke with Ashley Ebersole, former senior counsel for the Securities Exchange Commission, to get a broader look at both agencies' new approach so far this year and some of the issues that regulators could tackle next.
I want to keep this pretty broad, and I think I should start with where the two regulatory agencies, the SEC and the CFTC, stand right now, because I don't think it's unfair to say that the SEC was more on the offensive when it comes to crypto under the Biden administration, that the CFTC maybe wasn't quite so much in the same case, but it still had enforcement action that it was focused on during that time. Now, so much has changed in the past 9 months. Let's start with where we are right now from your perspective.
Sure. Well, if you're going back to, I don't know how else to say it other than the darker days of the Biden administration, when there was leadership at the SEC, certainly, that was openly hostile to the crypto space. But to your point, the CFTC wasn't dramatically better. They were perhaps better in comparison. But, I think that during that time, you had at the SEC leadership that was not focused on the three-part mission of the SEC of encouraging capital formation, protecting investors, and maintaining orderly markets. Maybe they were protecting investors, and possibly they were looking at maintaining orderly markets. I don't know that they were doing much else. Today, you've got leadership at the SEC under Paul Atkins that comes in and says, there are these new technologies that are, at a threshold level, extremely interesting. Maybe there are different protections we have to think about given the novel issues presented by these technologies, but in no way should we be opposed to the role that these new technologies can play, because they might make for a dramatic improvement in the way our markets function. And that openness and that willingness to engage is so important.
Let's talk about that engagement angle that you're mentioning. I mean, the two agencies held a roundtable at the end of last month to sort of dispel this notion that they're at odds and to commit to working in lockstep while remaining individual agencies. Talk to me about the significance of that meeting and if anything stuck out to you as they engaged with the industry, because they did have industry leaders at that meeting as well.
So I think that, in the lead up to that meeting, there was some chatter about, well, isn't it amazing that the SEC and CFTC are coming together? They're two warring stepchildren, and they've been, at odds for years. Like, I don't think there's much to that. I do think that the roundtable was notable for dispelling that, because you saw the intelligent, well-informed perspectives from the agencies, and nothing that would put them at odds with each other. On the industry, both agencies publicly proclaimed a dramatically improved environment for the industry, and engaged with the folks from industry who were there in a very meaningful way, I think. And, there were very welcome statements about concrete changes that could be made around improving regulatory approval processes, being open to new interpretive guidance and that kind of thing. So, those are the important discussions that I think were not happening under the prior leadership at these agencies, certainly at the SEC, where, the Gary Gensler was in charge, and pretty soon you started hearing from SEC staff that if what you're here to talk about involves crypto, like that, it's off the table.
I want to jump to some of the topics that regulators are looking to potentially tackle. And I think a good place to start is just the fact that the SEC has said through memos in recent months that most of the crypto space isn't under its purview, that they aren't securities. That would put them under the CFTC. Has the CFTC picked up the ball, so to speak, when it comes to regulating the agency or the industry and speaking up in the ways that you're expecting them to?
I guess I'll say two things. First, you've got a very strong leader at the SEC in Paul Atkins. He was a commissioner before. While I was in law school, Paul was a commissioner. So he's been through all of these issues before. He's extremely well-versed and has deep experience with the financial regulatory laws. So he is sort of the epitome of what you would want in an SEC chair. People thought you might get that at the CFTC with Brian Quintenz, who was also a former commissioner and had been of the CFTC and had been nominated. His nomination stalled for whatever reason. They do have an acting director. I think that they've been doing what they need to do. I just don't think that there's been a dynamic person at the top like there is at the SEC who is going to say, this is mine to shape now. I have a mandate from the White House and I'm going to take this and do that. So I think there is that factor that we're sort of waiting to see what happens there. What ultimately the CFTC does is not going to look exactly the same as the SEC, just because they're authorizing laws and their agency structure are just very different. So, I wouldn't expect that it's going to look exactly like the SEC. I do think that they've been active in a meaningful way and would expect them to get more so once they have a permanent CFTC chair in place.
One other area I do think is pretty closely tied to this conversation is the growing trend of tokenized stocks. I mean, you're seeing some pretty big brands push this new offering to their customers. And I'm just curious if you can speak to how these fall under the SEC's remit and how you expect the agency to look at these new offerings.
Sure. It's interesting because there's been such a range of different products. And I think I just saw an article in the last day or two about the shortcomings of the various products that have come out. Some of them are SPV based. So what the investor is actually buying is not something that's directly linked to the issuer of whatever the stock is that they think they're buying. They have a claim and they're purchasing from an SPV, a third party that's between them and that issuer. Or they're not available to people in the US, or there's only a limited subset of equities that can be traded through whatever the tokens are and that sort of thing. So there's different permutations of this. But, these are investments. They're equity linked. So that the SEC is going to have jurisdiction, whether you call them new types of securities, whether you call them security-based swaps or some other kind of security-based derivative, that's the SEC's territory. So, I do think that we will see additional guidance and rules coming out of the SEC that take it even further in that direction, because I think that the new leadership sees the efficiencies that come with the tokenization technology as being potentially very beneficial.
Okay, that's all for Crypto World this week, but we will be back again on Monday, and we'll see you then.